John, this morning, Australia's biggest company, the Commonwealth Bank, released its half-year results to the end of December. Came in slightly better than expected. I think after-tax profit of about 5.1 billion. And the stock is trading up 2% at a new all-time record of $165. John, I guess the Commonwealth Bank is probably a good representative of the overall Australian economy. I think something like a third of all Australians have an account with the Commonwealth Bank, and it lends money to something like 25% of all Australian businesses. Did you have a look at the result, and do you think that that reflects Australia kind of starting to grow a bit faster again?
Well, I look at it this way. There's no doubt Commonwealth Bank's very expensive based on historical measures, if they're relevant. It's also at a significant premium to the other banks, so I think that's more relevant. And is that premium justified? And what I saw from the Commonwealth Bank result is a very well-managed bank, outperforming the other banks in market share, particularly, as they said, in direct mortgages, not through the broker network, direct through their own network. So they're writing about 45% of all mortgages in Australia. So they've got a great bank. So they've got a great market share. And having said that, and there's pros and cons, but their profits up 2 or 3%, and slightly outperform the market. So best bank in Australia, doing far better than the others, and it's not dramatically growing earnings. There's an old saying, if you're going to be on 20 plus times earnings, you want to be growing your earnings at 20 plus percent. So they're growing low single digits and have a very high multiple. So there's a disconnect between the valuation. Having said that, as you pointed out clearly in your question, this is the biggest company in Australia, not only the biggest bank, but the biggest company. And if there is such a thing as magnificent companies in markets, which is, that's what indexing does. It does magnify the returns of companies who are very good. In America, they have the Magnificent Seven or Magnificent Eight. In Australia, you struggle to get one or two magnificent companies. And Commonwealth Bank falls into the category of a magnificent company, but doesn't grow its earnings in a magnificent rate. So it's a quandary. And we know that as markets rise and various investment strategies, investment methodologies, value or growth or stable, all these ways that fund managers sort of say they invest, the index just does what the index does, and eventually people end up saying it's too hard, I'm just going to default with index investing, and then it magnifies the returns of the stocks which are large in the index. And that's probably what's happening with Commonwealth Bank. The problem with a bank being the magnificent company in our index is that it's a very cyclical business. It's a highly levered business, banks, and they're cyclical. So when we get a downturn, we know this from history that the banks have the most serious part. In a financial downturn, an economic downturn, the banks who are lending to the economy, if they get bad debts, there's a serious dislocation of their profit. And what's happening now, and probably right, there doesn't look to be a recession on the horizon in Australia. There's a lot of confidence in Australia's growth. It might not be great growth, but there's confidence. Commonwealth Bank's delinquent loans are very low, very low non-performing loans in the housing sector. So at this stage, there's tailwinds, and the headwind of valuation is not affecting where that boat's going. Yeah. So you just got to sit back and watch. The question for shareholders in it, if you don't have to sell, great. But if that's a major part of your portfolio, what you're going to be seeing, what you should be seeing, is a slowing of investment returns from an overpriced stock. And if there's no tax consequences and you want to rebalance your portfolio, there's probably an argument to rebalance down Commonwealth Bank and buy something else. And I think the gap between Commonwealth Bank and the other banks is probably too great. So there's switching inside the banking sector where you can get a better yield, probably get 2% better yield on the other banks, which is not insignificant when it's franked. Lower PE, but probably not with the growth of Commonwealth Bank, and there's not much growth in Commonwealth Bank. So you have to
Mm.
say, well, what are the other banks going to? If they're not performing as well as Commonwealth Bank, how are they going to grow earnings? If Commonwealth
Yeah.
Bank is doing fantastically well and hardly growing earnings, so there's quandaries all over the place in terms of the banking sector.
Yeah, I completely agree. I mean, personally, I've held Commonwealth Bank for years and years, but I kind of feel almost guilty not being disciplined about reducing it when it's trading at a 26 times PE. It's on a dividend yield, albeit fully franked, of only 3%. Um, and compared to its history, it's ridiculously expensive. But as you say, it's a function of indexing and lack of alternatives.
Hmm.
Anyway,
Yeah,
I'm probably just going to hold and sit with it and not
yeah.
worry too much if it comes off the top. And hopefully, in 2 or 3 years' time, it'll be higher still.
Hope so for you. Hope so.
Yeah, and John, there were some other data points coming out, really softer numbers, consumer sentiment surveys, and so on, showing Australia picking up slightly. I think there was the Westpac consumer sentiment survey and also the NAB business survey. They both came in more or less where they were expected. So consumer sentiment still below its long-term average. The NAB business confidence slightly above the long-term average. Do you think that the economy is gaining a little bit of momentum now that people are expecting a rate cut on February the 18th?
Well, that's all it is. I mean, it's the
Yeah.
confidence indicator is probably because the broader population's reading the press, listening to the news, and the commentators are saying we're going to get an interest rate cut. If it's not next week, it won't be soon after, which gives, in terms of a sentiment survey, and I'm always sceptical about sentiment surveys, whatever they mean.
Mm.
I mean, honestly, but it does helps the sentiment of the household sector who says, well, we've got lower interest rates. I was pointing out to a presentation last week, which I did in Barrel, and if anyone's interested, I'm doing one next week on the Gold Coast, so you can ask how you can attend that. It's a third party show, but the point I said to them, well, the people in the room were what I call mature retirees, and you're talking to an audience with lower interest rates, lower yield on their term deposits, lower yield on
Mm.
risk-free investments. So what will be good news for the household sector, which is geared, is not great news for the retirees who are looking for passive investment returns. And I made that point to them, and it was like universal, oh, yeah, I hadn't thought of that. So now, admittedly, the audience I was talking to last week, they're not big consumers. They're all living within their means, but they
Mm.
will see a fall in income. And it's interesting, if you're managing your own pension fund, you get hit by low interest rates. But if you're in the Commonwealth pension, so if you're on a Commonwealth pension, you get indexed and you recoup, you get a higher pension. So lower interest rates, all things being equal, are better for the geared part of the population and the low income part of the population. And I think that's the dominant, that's the majority of the population. So you get this consumer sentiment, as you've indicated, gets better because those cohorts are going to benefit from lower interest rates. I think that's what we're seeing. And the flow-on effects, which we continually talk about, the high immigration rate of Australia constantly is growing the economy, growing demand, and that's why businesses feel, look, it's not conditions aren't fantastic, but they're buoyant.
Yeah. On the international front, we had Trump declaring ordering tariffs on steel and aluminium, which Australia is a significant exporter to the US, although it has operations in the US.
Yeah.
Was that a factor in, and do you see Australia perhaps being exempt from Trump's tariffs, or how do you see it playing out?
Oh, look, I'd be surprised if we're not. I mean, I
Yeah,
think I've come to the conclusion again. You shouldn't be commentating on everything that Trump says or
yeah,
does.
yeah.
I think he's very much frontal brain, so he makes quick decisions. And if you asked him a week later what he said last week, he probably can't remember it. And I think that's what we're dealing with. So he has these decisions, he makes them, and then as parties who are affected by those decisions, depending on the strength of their argument, he'll backtrack on it. And I think Australia's argument's pretty strong in terms of why would you hit us with tariffs when we know it's documented we have a trade deficit with America?
Yeah.
Yes, we do export some steel and aluminium, but also our companies run operations inside America. We're an ally of America. Why would you attack us? And I think he will withdraw clearly. It'd be strange not to. I think that's what the advice he would be getting. But when you start with a tariff, it's blanket, and then you start cutting back the blanket. Now, who's going to be affected really? And it's quite clear when you look at the tables. The biggest effect is on Canada, then Mexico, Brazil is another, and then China, Korea, Vietnam. So countries like that. So there's a lot of these tariffs are very, very targeted at North America. So they've got a NAFTA, they've got a North American Free Trade Agreement. He's obviously junked that, and he's going for some sort of agreement with his neighbours where he dictates the trade flows and the cost of goods and services. So that's what he's driving. So where it ends up, I don't know.
Some other big news over the week was an all-time record high in the gold price. Now, we've spoken about gold quite a lot. We've pointed out that, on the supply-demand equation, there's a lot of demand coming from central banks building up their reserves, which, in countries like China and India are still very, very low levels of gold. Is that meaningful to the Australian economy? Do you have any insights about, what the future for gold is?
Look, I should have said earlier when we talked about Commonwealth Bank and valuations, when you've got, I'll call it an investment asset like Bitcoin, which has no intrinsic value and has rocketed, and no one can really tell you what its value is or why it's being repriced, then every other asset, and gold is in that basket, which is speculative, you go, well, would I rather fundamentally buy gold or Bitcoin? And there's a fair slab of the investment or trading market which would say I'd rather buy gold. It's got 10,000 years of history, whereas there's other things got 10 years of history. So I think there's a flow-on effect. I've done presentations in the past where the discussion about Bitcoin and gold the questions being asked, what's the future look like? And I said, well, we can't even explain the present, so how can we predict the future in terms of these commodities? So, but I said my comment, and I think it's now playing out, that gold a year or two ago, or 3 years, 4 years ago, when Bitcoin was starting to come out of the ground, I think the valuation of Bitcoin was taking away from the valuation or the revaluation of gold. Now, we've sort of hit a level where Bitcoin is at, who knows? It could be ridiculous. It looks ridiculous to me, but, then people are going to tell you it's going to go to $1 million. So who knows? But it's gone to $100,000 a coin. And then you go, well, at some point, gold's got to reflect that speculative value, which is coming off in Bitcoin. So I think we're getting a catch up in gold. I also think there's, political tensions around the world. The new Trump presidency, his development of this tariff policy. And I make this point, like tariffs, if he follows through, there's an inflationary effect. I guess we'll talk shortly about the Federal Reserve's comments overnight. There's an inflationary effect on import prices, which the American consumer will have to pay for because they'll be passed on, because you're not going to replace these imports quickly. So, we've got an inflation surge, which is good for gold, so there's all these things going for gold right now, which you'd have to say, look, yep, there's some fundamental reasons why gold should revalue. What's gold worth? Again, who knows? But based on Bitcoin, it looks much cheaper than Bitcoin. And then you get to stock prices and you go, well, Commonwealth Bank compared to Bitcoin, okay, if we're going to play that sort of valuation thought process, what can Commonwealth Bank go to? They're silly discussions, I admit that, but once you create an imperfect market like Bitcoin and you start following what's that mean for other asset classes, you get some quite crazy reflections.
Yeah, I guess the advantage of holding a little bit of gold in a portfolio of assets is that it's generally uncorrelated with or negatively correlated with the US dollar and with growth markets. So if there is some sort of collapse in the US dollar or equity markets, gold generally tends to do better. So
Yeah.
it's a good diversifier. But John, I want to come back. So the RBA's, the market is telling us, is likely to cut on the 18th of February. The Fed has given a different kind of message. What are they saying? They higher for longer?
Well, they're in terms of the testimony last night to the American Senate. I mean, the head of the Federal Reserve was saying, well, there's no, given what we've done, we've taken the interest rates down 1%.
Mm,
Do we need to do much more at this point in
yeah,
time? He was indicating not really.
yeah,
I still think they are slightly going to cut. If you look at inflation, it's very similar to Australia, and our cash rates are very similar now.
yeah,
And Australian currency, we talk about this endlessly, very weak. If interest rates are cut, what's it do for the Australian dollar? What's it do for our inflation coming from imports?
mm,
But I think the Federal Reserve is saying, look, given the tariffs that the administration's put on, clearly that's inflationary. If we start cutting interest rates and we see the risk of inflation coming from import prices in America, then we could look stupid. So Trump's given the Federal Reserve a reason not to cut at this point in time. Now, that
mm,
then leads to what's Trump going to do? Now, it's illegal for him to sack people from the Federal Reserve. He can't do that,
mm.
as I understand it.
Well, Powell's term goes until
Yeah,
2026. Yeah,
yeah. So, let's see what happens on this game, because as I keep
yeah,
on saying, it's a TV show, the Trump administration, every week, every day, something different. So there's no doubt there's going to be a confrontation between Trump and the Federal Reserve over interest rate policy.
yeah,
But then again, the Federal Reserve's got a legitimate statement saying, well, you're putting up tariffs, you're creating potentially inflation. We're going to wait and see. So he's
yeah.
armed them with the reason not to move. So now he's going to have to come up with a reason why they should move. And the only reason they'd move is the American economy weakens. So the American economy is showing no signs of weakening. In fact, there's a renewed confidence in the American economy with the administration.
Yeah,
And if the American economy continues to grow at the rate it is, then the Federal Reserve will say, well, we don't need to do anything. Economy's
yeah,
fine. So
right.
it's just an interesting situation we have there. So to watch this
Yeah,
space, it's very, very hard to predict.
yeah. And whereas the American economy is growing at about 2.5%, I think we'd be lucky to get half of that.
Yep.
We've got an election coming up. We've spoken about it in the past. Both parties and leaders are doing a lot of electioneering, with spending announcements being announced on a daily basis. Are you getting a sense of the big divides between the parties? You spoke last week about superannuation.
Yeah.
Anything else that
Well,
you want to highlight?
I think what we're seeing, and we've seen the benefits to women pharmaceuticals, quite significant savings there, which is great. And immediately the opposition went bipartisan and said we support that.
Yeah,
Now, in my written views on the budget and the midterm budget update, the government clearly has capacity, and I think there's estimates of about $5 billion they have in their back sleeve to announce pre-election. So I think that $5 billion is going to be utilised. So probably, if I'm the government, I'm probably going to do one a week or one a fortnight, new initiative, spend a bit of money, get on the front foot, and the opposition's got to say yes, tick the box, unless they've got something better. So that's interesting play out. I think the other thing we see in a pre-election situation, which you don't normally see, say, mid-term, is when this morning we've got something like Rex, which is in administration, and the government's now saying that they're going to come in and bail out Rex or take an equity stake in it and bring it into the government control. Now, that only happens when there's an election in the offering. The governments all of a sudden see the benefit in taking over a private enterprise, which is an essential service. So,
well, that's like 100 million or something like
yes,
that. Yeah,
that I actually think it shouldn't be an election exercise. The country transport system and getting people around the country in paths which Qantas and Virgin don't want to fly to, it's absolutely essential.
It is.
But you only see governments move pre-election,
Yeah.
So
Well, they're lucky that the iron ore price is holding up, and
yeah,
it's in the estimates at $60 a ton. It's
still
105 or something.
Look, and that's my point. Going back to the midterm budget, the budget situations are much better than we're led to believe.
Yeah.
Which makes me think the outlook for the budget is probably better than the government's telling us. And there's tremendous capacity, I think, for the government to offer some sweeteners going into this election. So does that help the stock market? Does that help the economy? Does that help sentiment? It could all well do. Does it win the election? Well, maybe not. Maybe it does. But there's going to be a lot of stimulation to the economy in the next 2 months as this election unfolds. So there might be a little bit of tailwind to the Australian economy.
Yeah, I think we'll have to end it there, John. Thank you so much. And again, a reminder, if people want to attend your presentation on the Gold Coast, they should make
Contact
inquiries.
Yeah. We'll send them. It's a Broadbeach retirees club, but if people can attend if they pay a little fee, but that's okay. But it's Broadbeach next Wednesday.
Right. Thanks, John.
Thanks
All
for
the
that.
best. Cheers. Okay.
Bye.